Oil is tumbling below $50 per barrel, so it's an even neater trick that the S&P and the NASDAQ are above record close levels. Oil closed down 5%. It's down even more in the aftermarket session. Look at that, down 5.33%. Why? We knew OPEC, and we told you OPEC was having a meeting in Vienna. Non-OPEC members were there. They did exactly what everybody expected. They extended their 1.8 million barrel a day output cut for another 9 months. March 2018, to fight the global oil glut. But it's what they didn't do that has oil dropping about 5%. Let's bring in our floor show. Keith Bliss, Cuttone & Company Senior VP. And then we've got Rob Thummel, Tortoise Capital Portfolio Manager. I'll start with you, Rob. It's what they didn't do, and that is increase the cuts.
Yeah, well, Liz, I think today's more about technicals, right? I mean, oil dropped below its 200 moving day average, and the technical guys got a hold of this and just kept pushing the price lower. Fundamentally, what OPEC did today was very constructive for the markets going forward. They cut or they sustained lower production in a period where we're actually going to see significant demand over the next several quarters. So we're going to get oil inventories down to where they've been historically. And usually when you get oil inventories back to their 5-year average, we think oil prices at Tortoise then will rise and probably go back to that $50 to $60 range for the long term.
Keith, when you look at a lot of the big oil names, whether they are the integrated, they looked much better earlier in the week. But to me, if I'm hearing that it's fundamentals, to me, I mean, OPEC meets again in November. Now we're well below what we were yesterday. I mean, yesterday we were above $51 a barrel and even 52, and now we're at 48 and change.
Yeah, exactly. I mean, listen, I can't get too deeply into oil. That's not my main area of expertise. But you're right, as it overlays into the equity products and components that make up the energy complex, it is troubling. And they are very reactive to what's happening in the oil space and the price of crude. So if crude is trading on technicals, which I believe it is, there's not a lot of, you would think fundamentally, you're right that they didn't say they were going to cut further, but they did keep the cuts in place. Personally, I think oil is going to be stuck in a trading range because the U.S. oil producers can still make money here. But as the technical trade happens or the fundamental trade happens, it's going to crater the energy complex.
I am looking at something I can't believe. Seadrill at 52 cents a share. That was a huge stock just a couple of years ago. But quickly, Keith, give me a sense of retail looking wonderful at this hour. Is that just that Sears did better?
Well, it's Sears, it's Best Buy, it's some of the others. I think the jury's still out on retail. We're going to get personal income and outlays on Tuesday when we get a big data week coming next week, and we're going to have to really take a good hard look at what the future retail is. I still think the bricks and mortar stores are in trouble longer term, and I think this is a momentary blip. Remember, retail's been beaten down so hard by the earnings picture, by some of the announcements out of the big ones, that's why you're seeing a little bit of a snapback, and we got this lift here today.
We still need clothes, Rob Thummel. I mean, obviously.
You can order those online.
Yeah, exactly. Rob, where are the flows? What do you see as the hot next trade?
Yeah, well, you know what? I see oilfield services stocks are a great place to be. We still think U.S. production's going up. And the fact that oil prices are low actually is a good thing for a lot of places like infrastructure, right? That means U.S. oil production continues to rise. You need more infrastructure to basically transport oil. So there's a lot of great infrastructure stocks that pay high dividends, like Enterprise Products Partners, Magellan Midstream Partners, Kinder Morgan. All these are great stocks. They do well even if oil prices are declining.
Gotcha. It's great to see both of you, Keith and Rob.
Thank you.
See you next time.